Okay, so the topic for today is going to be market structure, but multiple time frame analysis, choosing your time frame, and trend reversals, pullbacks, and impulses. We probably won't have time to cover them all, but whatever we don't cover now, we're gonna cover it in the next class, right? So let me write this down. MTA stands for multiple time frame analysis. And then we have choosing your time frame, right? Anyways, so obviously, as a trader, right, when you first come to the charts, you start from the monthly when you're doing your analysis, right? The reason why you start from the monthly time frame is because the higher time frame obviously has more influence over the market, right? And you always want to get an idea of what's going on in the bigger picture before you make your trading decision, right? So let's say your trader routine might go something like this. Every morning, you hop on the charts. If you're analyzing a new pair, you start from the monthly time frame, come down, right? Yesterday, we went over market structure, the trends, and knowing which direction the trend is going, if it's up, sideways, or down, bearish, bullish, right? Multiple time frame analysis and market structure goes hand in hand. So you basically need to know what market structure is being shown on every time frame, right? So, for example, the higher time frame could be in an uptrend, and the lower time frame could be in a downtrend, right? We know that an uptrend is made up of higher highs and higher lows, right? And we know that the push up is called an impulse, and the pull back is called a pullback, right? Basically, trend is made up of impulses and pullback, right? So, for example, what might be a impulse on the higher time frame, and then what might be a pullback on the lower time frame, right? This is an impulse. This is a pullback, right? Now, notice we're on the monthly time frame. So, this is an uptrend. However, if we drop down to the daily or the 4 hour, right, that pullback on the monthly could be a downtrend. That's why I said different time frames have different trends. So a simple leg back or a simple pullback on the monthly time frame would be a downtrend on the lower time frame, right? Now, why you need to know this information is because knowing that the higher time frame is in an uptrend is telling you that the market at a bigger, in the grand scheme of things, is going up. That way, you don't get caught up in the downtrend on the lower time frame thinking it's going to continue going down, when really and truly, in the grand scheme of things, the market is in an uptrend. And this downtrend which is just a pullback, would be short-lived, right? So, as I was saying before, when you approach your charts, you do multiple time frame analysis. You go through every time frame and you see what the market is doing on every time frame, right? So on gold monthly, we could see that gold is in a monthly uptrend, right? Yeah, gold is in a monthly uptrend, right? Let me just draw it out for you guys. So we know for a fact, right? And this is what you need to know when you're approaching the market, right? I'll just write it down. Um, let's see, uh, monthly uptrend, right? And I'll leave this right here on the screen. So now we hop onto the weekly. This is just so we know which direction we're trading, right? Weekly, we can see it's an uptrend, right? That's my fault. And you need to practice this on your own, right? So now we hop onto the daily, right? We see we had a little downtrend on the daily, but now we have an uptrend on the daily, right? So I'm gonna just draw it out because it's better to see it visually, right? Let me change the color to blue. I'm going to hide the monthly lines, right? So as a trader, you know this is just what you do when you're doing multiple time frame analysis. You know the weekly trend is up, right? Because you know there's a trend, it's an uptrend, right? The daily uptrend, right? So all of this is information you've gathered from analyzing the market, right? Using market structure and multiple time frame analysis. You know the monthly is up, the weekly is up, the daily is up. So obviously you can see that the value of gold is increasing, right? With this information, you have to now tell yourself the only trade you're looking to enter on gold would be what? A buy or a sell? Up or down? Yes, up, right? Because obviously all the time frames are aligned and they're all going up, right? So you shouldn't be looking to sell gold. You should be waiting for a buy opportunity. You should be looking for that pullback, waiting for that pullback to change, and then jump in on that trade, right? So, yes, all the time frames are up on gold, but for many pairs, it may be mixed up. So you have to go with the ones that are pointing in a more clear direction. For example, if the monthly is up, um, the weekly is down, the daily is up, then you have to know what decision you're gonna make now, right? Basically, you'd have to know whether that time frame you're on is it a pullback or is it an impulse, right? And then you make that decision, right? What if it, okay, so presently, right? Someone asked, what if it breaks that way? Presently, the daily is in an uptrend, right? Because this is the high, right? This is the last low, right? This here, this is not the last low. In order for this to make a last low, the price has to make a higher high, right? So now we wait on one of two things before we make a decision on this daily time frame, right? We can wait for the market to make a, where's this tool? A low here. So that way it made a low here, a high here, and then a lower low. So now you would have a downtrend on the daily, right? Which would just be like a pullback on the weekly. Or we wait for the daily to make a high high, right? But as it stands now, the daily is in an uptrend. It's probably making a low. And then only when it gets above this level, um, it would have made a higher high to continue the trend. So basically, what the market is telling us here is the daily is in an uptrend as long as it doesn't pass this level, right? So throughout this whole section here is your chance or opportunity to make a decision whether to buy or not. If the price goes below this last low, then the buys, that's just not the characteristics of an uptrend, which means the daily is no longer an uptrend. But as far as we know, presently, the daily isn't an uptrend, right? So you would just have to look for the best place to buy, all right? Um, let's see here. I'm going to do, oh, yes. Let me explain the trend reversal, right? So how do you know when the trend has changed, when the trend is going to change? And how do you take advantage of that, right? Because you have to be able to know when the trend changing in order to be on the right side of the market or to enter a trade, right? So basically, we know that uptrends are made up of higher highs and higher lows, right? And downtrends are made up of lower lows and lower highs, right? Now, the moment the market stops making higher highs on an uptrend or lower lows on a downtrend, then that's cause for attention because that's telling us that the trend is about to change. Actually, as I was saying. So let's say the market is in a downtrend and it stops making lows and low highs, right? So instead of the market pulling up here and dropping, it makes a higher high, right? From the moment the market surpasses this previous lower high, then it's no longer a downtrend. Because according to the rules of the downtrend, the lower highs have to be lower every time, right? And the moment the market surpasses that level, then that is not the characteristics of a downtrend, right? So that's not telling you the market just made a higher high, and higher highs are not in downtrends. So that's telling you that okay, the market is about to reverse or start a new trend, right? So what makes higher highs? Obviously, an uptrend, right? So once the market makes a higher high, then you know if you're not sure, you wait for the trend to come. Yeah, sorry about that. I think my internet connection was a bit low. I was saying, you wait for the market to make a lower high and make a higher high, and then now you can say, okay, the trend has reversed, and now the market is in an uptrend, right? Because the market is now making higher, higher highs and higher lows, right? So I'm going to show you an example. All right. Here we had a trend reverse, right, on gold. So we had the market making lower lows and lower highs, right? All of this would be considered. Basically, you want to take it from the highest point before the market turned around. So this would be the, the lower high, right? And at this moment right here, the market started making higher highs and higher lows. So the uptrend started right here because the market was now making higher highs and higher lows, right? Over here, the market was making lower lows and lower highs. That's why you need to know the characteristics of your trend, right? So as a trader, how would you have entered this trade on the trend reversal, right? For example, if you've been paying attention, you know that the monthly is up, the weekly is up. So the daily at this point in time is down, right? That downward movement we knew would have been short lived because it was probably just a pullback on the weekly time frame. So basically, when the monthly is up and the weekly is up and the daily is down, you know that that daily trend is gonna turn around and continue up. So you just wait for the market structure to be broken. So you follow the markets while it's making its lower lows and lower highs. And then once the trend changes, the higher highs and higher lows, you know then, okay, this is the beginning of an uptrend. So you would look to get in, right? And obviously, this uptrend will have a lot of momentum because the monthly is up, the weekly is up. So the pullbacks will be short lived, it will be slow, but the impulses will be fast, right? And that's what you want to get in on. You want to get in on the impulses. A lot of the time, the impulse will be fast, and then the pullback will be slow, and then the impulse fast, and then the pullback slow, right? So as a trader, once you see the market is now on an uptrend, based on the rules you know and the techniques you've learned, you would learn, I would teach you how to get in on these trends, right? But that's not for this lesson. This lesson was just for identifying the change in market structure, which is pretty simple. Once you know what a downtrend is and what an uptrend is, right? And then you do your top-down analysis. You know that the higher time frame has more influence over the market, right? So wherever the higher time frame's direction is, that's the direction you want to trade. Yes, you could trade in the opposite direction, but the probability won't be in your favor, right? So I'm just going to go over another pair and do some top down and see. All right. This is GBP NZD. So let's see. What's the monthly time frame telling us? Uptrend, right? Higher highs and higher lows, right? So pullback. You know the monthly is up. Weekly. The weekly is let's see. It is up, right? Yes, we had highs. We had a sharp pullback, but now we have the weekly trend is up because the market surpassed this previous high, right? It made a higher high, right? This was the last high. The market surpassed it by maybe a few pips. So now what we expect the market to pull back and go higher, right? Because we know this is an uptrend and we know that this is the higher low, we know that the market cannot go beyond this point because that would make the uptrend invalid, right? We know it's an uptrend, so we know within this area we have a chance to enter long, right? We just have to find the best price to enter long at, right? So let's hop onto the daily. Daily trend is up, right? This was the last lower high. So we know on the daily time frame, in order for the daily uptrend to remain valid, the market cannot pass this level, right? Go on the 4 hour. Now the 4 hour time frame, the trend is down, right? But we know that that's just a pullback on the weekly, on the daily, right? So what you would do as a trader, once you learn the rest of the stuff I will have to teach you, you're gonna know when, where, what to look out for to know when to enter the trade to go long, right? But just based on what we know so far, if we were to get into this uptrend, we would just wait for the 4 hour time frame to realign, meaning we would wait for a break of market structure on the 4 hour time frame. So we'd wait for the 4 hour to make a new high, right? And then when it's making that lower high, we would enter and continue the trend, right? That's just based on what you're taught so far. but you're gonna learn what to look for to enter in on these trends, right? But this is the very basic. If you have any questions, please drop it in the chat. I'm sorry, my Wi-Fi is not that good tonight. Well, for this particular pair, all right, the weekly is an uptrend, the monthly is an uptrend, right? The only downtrends we would see is lower time frame downtrends, right? Because a lower time frame downtrend is just going to be a pullback on the higher time frame, right? In order for any of these higher time frames to be in a downtrend, the market has to move quite a bit, right? So now that the 4 hour is in a downtrend, we don't expect the 4 hour to pass this level, right? Because if it passed this level, then the daily would be in a downtrend, right? Because this is the last lower high on the daily, right? Right? So as far as we know, monthly up, weekly up, daily up. Exactly. So we know the monthly up, we know the weekly up, and we know that this is just a pullback on the daily. Unless it passes this level, then the daily is still considered an uptrend, right? So we have all of this to find the perfect entry, right? And based on what we learned so far, to enter in on this trend, we just wait for the 4 hour or the 1 hour to change directions, meaning the 4 hour, the lower time frame is in a downtrend. So we wait for the market to break structure and then we enter on any of these lower time frame pullbacks, right? So as long as price is above this price, the market is still in a higher time frame uptrend, and we could still enter long. Higher time frames are daily, weekly, monthly. Lower time frames, 4 hour, any other hour time frames, right? And you always want to go in the direction of the higher time frame because the higher time frame is the time frame that moves hundreds of pips, and you want to catch hundreds of pips, right? Let's see. For example, we had this trade that I sent out earlier this week, right? We could see that the daily time frame is in an uptrend, or the weekly time frame is in an uptrend, right? So we know that this is the lowest point, and if the market surpasses this point, then the uptrend is no longer valid, right? So what did we do to enter this trade that was sent out? We wait for a breakout structure on the lower time frame, right? So this daily time frame was in a downtrend, and then we had that breakout structure right here, right? It surpassed this previous high, right? Now we entered the trade when it came down to this level, right? But just based on the knowledge we had so far, we knew that this was now an uptrend, so the market should not have passed this level right here. That would have made the uptrend invalid, right? But sometimes the market tends to push a little past because, well, they say it might have had a lot of retail traders stop loss right there. So the market might have dipped down just a little extra just to take out some stop losses. Whoever keeps tight stop losses before it pushed up, right? But based on what we just learned, this trade setup, most of it was based on just what we just learned, and this was a valid trade. It took a while, but if you have patience, then you would hold the trade, right? So basically, um, because the market did push beyond this point, this would be considered a downtrend. However, the last lower high would have been here, and the market has pushed beyond that point. So it's back to being an uptrend, right? So then we have this low, low, high, and we hope that we can continue with the weekly bias, right? Because the weekly time frame is up. This is the last weekly low. So this should be the next weekly lower high. And we're gonna hope that we can come all the way up to make a higher high on the weekly time frame, right? If we can do that, then that would be a 500 pip move. A lot to predict, but anything can happen, right? Sometimes the market gets up this high, and something in the world happens that causes the trend to reverse, right? But based on our rules, this is what it is. So I hope that live example of a trade we took in the signal room showed you how you can use market structure and multiple time frame analysis to find a trade. Obviously, if you're looking at this and hearing this for the first time, it might not be as easy or make much sense to you, but you have to watch this lesson over and over and then practice it on your own and get familiar, right? Practice drawing out your trends. Practice seeing where the trend reverses. And practice, okay, if the trend reversed here, where would I have entered? You know, practice your top down analysis, right? I've done this many times, so it's easy for me to see, and it's easy for you when I'm doing it. But if you had to do it on your own, it would not be so easy, all right? Because I remember when I was practicing this. All right, so my Wi-Fi is a bit slow today, but I think I got the lesson across, and we'll continue tomorrow, all right? Because the next lesson I have, I don't think I have enough time for it. This Wi-Fi is being very unpredictable tonight. So thanks for hopping on. I'm gonna drop the link in the group, and thanks Nick for the YouTube.